Hey there, car enthusiasts! Welcome to Piston Pundit, your ultimate pit stop for all things automotive. Today, we're tackling a shocker in the EV world: China's abrupt retreat from Europe's electric vehicle market. This isn't just about sleek rides or cutting-edge tech. It's a power play in a global tug-of-war over green innovation. From tariff battles to battery supremacy, this is a geopolitical showdown that's redefining the EV landscape. Grab your gear, we're breaking it down, chapter by chapter. Number 8. The EU's high-stakes tariffs, smart strategy or risky bet. The EU's decision to impose tariffs up to 45.3% on Chinese EV imports is a bold move aimed at shielding its automotive industry. The tariffs, framed as a response to China's alleged unfair subsidies, have triggered a strong backlash from Beijing. The EU claims China's state-backed EV industry creates an uneven market, with automakers like BYD and NIO underpricing European competitors. However, these tariffs carry risks, such as higher EV prices for consumers and slower adoption rates. An internal EU vote revealed division. 10 nations supported the tariffs, 5 opposed, and 12 abstained. This highlights the uncertainty of the decision, with supporters focusing on job protection, while critics warn of escalating trade tensions with China. Number 7. China strikes back. A diplomatic shift to power moves. China wasted no time countering the EU's tariff salvo. Almost immediately, Beijing ordered its EV titans to pull back investments in Europe. This wasn't a random act. It was a calculated move aimed at rattling both tariff-supporting nations and those sitting on the fence. The retaliation didn't stop at cars. China expanded its countermeasures to target Europe's pork and dairy exports, signaling its willingness to broaden the economic battlefield. This is classic China, leveraging its massive market as both carrot and stick. Meanwhile, Chinese EV giants like BYD and NIO are presenting a united front, reinforcing their negotiating power. Compared to the EU's fractured trade stance, China's cohesive strategy is a stark contrast, giving it the upper hand in this escalating conflict. Number 6. China's battery supremacy, the real power play. Let's not forget what truly powers this EV feud: batteries. In this arena, China reigns supreme, commanding 32.6% of the global lithium-ion battery market, thanks to industry giants like CATL and BYD. This dominance is no accident. Over the past decade, China has poured billions into its battery supply chain, from securing raw materials to ramping up production facilities. China's edge is further bolstered by its policies. Foreign automakers operating in China must use locally produced batteries, ensuring that domestic suppliers maintain a competitive edge. Europe, meanwhile, is playing catch-up. Despite ambitious plans for battery production, many projects are behind schedule, leaving European automakers heavily reliant on Chinese suppliers. This dependence is a glaring weak spot. Without a reliable domestic battery supply, Europe's dream of an independent EV ecosystem risks staying just that: a dream. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point. Number 5. European automakers, trapped in the crossfire. European car makers are caught in an impossible bind. On one side, Chinese competitors like BYD are retreating, rethinking plans for European expansion to avoid the tariff blow. On the other side, Europe's own automakers face soaring production costs due to stringent labor and environmental standards. Take Volkswagen, for instance, Europe's EV poster child. The brand is grappling with how to remain competitive against Chinese imports without slashing prices or compromising on quality. For many manufacturers, these challenges threaten more than just their bottom lines. They jeopardize the jobs of the 2.5 million workers in Europe's automotive sector. For now, the question remains: will tariffs safeguard European automaking jobs, or will they accelerate the industry's decline in an increasingly globalized and competitive market? Number 4. The high cost of geopolitical gambits. This isn't just a trade dispute, It's a high-stakes geopolitical maneuver with global consequences. The EU's tariffs on Chinese EV imports aim to reduce reliance on China's economic dominance, yet the risks are mounting. Europe's heavy dependence on Chinese batteries and components complicates the equation. While these tariffs might offer short-term protection for local industries, they risk driving up production costs and slowing the pace of innovation. Experts warn that these measures may act as temporary fixes rather than addressing the root challenges of the EU's EV sector. The situation becomes even trickier with the US imposing its own tariffs on Chinese EV imports, creating a fragmented and more challenging global market for automakers to navigate. Number 3. Safeguarding jobs versus building the future. The EU's automotive industry, employing over 10 million workers, faces unprecedented pressure as Chinese automakers expand their market share, surging from 3.9% in 2020 to 25% in 2023. To protect these jobs, Europe has resorted to tariffs, but experts argue that fostering innovation and investing in green technology would be a more effective long-term strategy. For example, creating initiatives to upskill workers for EV-focused roles or funding emerging green tech startups could provide a more sustainable path forward. Without significant investment and vision, the risk isn't just job losses, it's the migration of the industry to regions better prepared to lead in the EV revolution. Number 2. China's blueprint for success. China's dominance in the EV market is no accident. Its government has spent years perfecting a strategic playbook, from subsidizing battery production to building nationwide charging infrastructure. The results speak for themselves. China is now a global leader in EVs and battery technology. In contrast, Europe's fragmented policies and uneven investments have stifled its competitiveness. To catch up, the EU needs to adopt a similarly unified and proactive approach. This could mean prioritizing local supply chains, incentivizing domestic production, and committing to long-term investment in green technologies. Borrowing strategies from China might be Europe's best bet for turning the tide. Number 1. The road to a greener future, and the cost of competition. The EU-China EV trade war is intensifying into a global showdown. China's EV dominance is fueled by integrated supply chains and control over key materials like lithium. This gives China an edge in production and battery tech. Europe faces a dual challenge, safeguarding its automotive sector while advancing the green transition. As Chinese automakers like BYD and NIO surge ahead, European brands like Volkswagen and Stellantis are scrambling to catch up. To compete, Europe must ramp up local battery production, form stronger ties with mineral-rich regions, and invest in advanced research. Recent losses in market share highlight the urgency, and the outcome of this trade war could shape the future of green tech for years. Closing thoughts. The EU-China EV trade war isn't just a market competition, it's a defining moment for the future of sustainable transportation and global green innovation. What do you think? Are these tariffs a bold move to protect European industries? Or could they backfire and stifle progress? Share your thoughts and experiences in the comments. We'd love to hear from you. Before you go, don't forget to hit that subscribe button and ring the bell to stay updated on all the latest automotive insights. Here at Piston Pundit, we're committed to bringing you the most exciting updates and in-depth analysis. Thanks for watching, and see you in the next video.